Hello, everyone. My name is Zuliqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. In today's market, steady, high-yield income is getting harder to find. Bond yields have been all over the place. Dividend growth at blue chip companies has slowed to a crawl, and inflation has been quietly eating away the real value of payouts. For income investors, this combination can be frustrating. You want reliable, meaningful cash flow, but sadly, the traditional places to find it just aren't delivering like they used to. And that's why it can pay a lot to look beyond the obvious. Some of the best income opportunities sit in the overlooked corners of the market, quietly handing investors robust dividends while everyone, chases headlines. One such corner is the closed-end funds. Among them, there's one name in particular that deserves a closer look: Eagle Point Income Company, Inc. They're traded on New York Stock Exchange under symbol EIC. Outside of this publication, it is very likely you've never heard of this ticker. EIC stock could be a great income opportunity hiding in the plain sight. There are three big reasons why EIC stock could be a great pick for income investors. But John, what can you tell us about Eagle Point Income Company before we go into the three reasons why it's a great opportunity for investors?
Thanks, Mo. Eagle Point Income Company is a closed-end fund, or CEF. Fund specializes in very specific slice of the credit market, and that's collateralized loan obligations, or CLOs. Most of Eagle Point's income portfolio sits in what management considers the safer part of the CLO structure, and that's junior debt tranches. To enhance returns, the fund is also allowed to allocate up to 35% of its assets to riskier CLO equity and related securities. For viewers new to this space, the closed-end funds raise a fixed amount of capital through an initial offering, then invest that pool to produce income growth for shareholders. CLOs are bundles of corporate loans that are sliced into tranches. Each tranche carries its own risk-return profile. The higher up the capital structure, the more secure and lower yielding it tends to be. Eagle Point Income Company's strategy is to focus mostly on the more stable tranches in order to deliver consistent monthly income while still sprinkling in some higher risk equity pieces to juice returns. It's worth highlighting that EIC stock isn't a one-size-fits-all investment approach. The fund is exposed to credit risk, interest rate sensitivity, and the complexity of structured products like CLOs add a little more uncertainty and risk. Anyone considering EIC should make themselves aware of the risks involved.
Now, John, let's dig into the details. What's the first reason income investors should pay attention to EIC stock?
EIC currently pays a monthly distribution of 13 cents per share, or $1.56 per share on an annual basis, which works out to a big inflation-crushing forward dividend yield of roughly 11.65%. That's also significantly more than investors could get from holding the average S&P 500 stock. For some perspective, the dividend yield on S&P 500 is just 1.25%, and that's below inflation. The payout doesn't always go up, of course. It recently reduced the payout from 20 cents per share to 13 cents per share. But this is primarily due to the nature of CLOs. Regardless, the dividend yield is impressive. Also worth noting, there's some predictability when it comes to income. The company announces a few months in advance how much income will be paid. Very rarely do you get this sort of heads up from dividend payers.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. Now, John, what's the other reason EIC stock could offer a windfall to income investors?
Now, the Federal Reserve is likely to lower interest rates in the coming months and quarters. This is primarily due to the U.S. economy rolling over and inflation somewhat controlled. This puts EIC stock in a very sweet spot. How so? First, many of the assets owned by Eagle Point Income Company are floating rate. This means that when rates fall, financing costs for issuers drop, which improves their cash flow. That tends to reduce default risk and improves the outlook for junior credit and debt in CLOs. Then, the falling rates often help the prices of junior tranches or CLO debt that was previously marked down due to high rates or just investors not finding them unattractive. Since Eagle Point Income has exposure to both junior debt and a slice of the CLO equity, it stands to benefit big time. Lastly, know that risky assets often rally as investors hunt for yields when rates fall. So EIC stock could find many buyers in a declining rate environment.
And John, what's the last reason EIC stock could be an opportunity hiding in the plain sight for income investors?
Well, if you look at EIC stock from a technical perspective, you'll see a few interesting developments. One major development worth keeping an eye on is how the stock has behaved since April of this year. EIC stock has made multiple bottoms around $12 per share. This is becoming a major support level and hints that buyers are accumulating. Then take a look at the longer 200-week moving average. The stock price was able to stay above it. This tells that the long-term trends continue to point upwards and investor sentiment remains bullish.
John, thank you so much for your insight. High yield monthly income is very difficult to find, but income investors can get it through EIC stock. It's certainly a great opportunity hiding in a plain sight. Eagle Point Income Company comes with unique risk and may not be for every investors, but for those who can stomach extra risk, EIC stock could be setting up to provide capital appreciation along with robust income. Currently, EIC stock offers a dividend yield of 11.65%, and that's many times more than what you would get from S&P 500. EIC stock also trades at a discount to its net asset value. This essentially allows investors to buy its portfolio of loans for less than its underlying worth. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.